My name is Steve Philp, and I'm the Partnership Director here at Portugal Pathways and your host for today's webinar. And navigating US and Portuguese tax laws can be complex. So today, we'll be discussing estate and tax planning along with investments for US connected citizens living in Portugal. It is important, however, to consider the overall tax position relating to a life in Portugal. Portugal's cost of living, the health insurance and property taxes are significantly lower than in the US and often more than offset any additional tax obligations aligned to wealth that you may incur. Today, our expert panel will answer questions throughout the session, so please feel free to leave your comments and questions in the chat. If we don't get to all the questions by the end of the webinar, our team are on hand and they will obviously reach out to you individually and obviously answer those questions. Today's session is being recorded, and a recording of the webinar will be sent out to you all within the next sort of 24 hours or so. And again, lastly, just obviously please remember, however, that everybody's circumstances are unique, and whilst today's discussion offers guidance, you should always seek professional indemnified advice on tax, investment and estate planning when coming from the US to Portugal. So without further ado, let me introduce today's panel. Firstly, we have Mr. Paul Stannard. Paul is the chairman and founder of Portugal Pathways and the Portugal Investment Owners Club. He has decades of experience working with private wealth and family offices across the US, Europe, and in the UK. Colleen Sherwater. Colleen is the founder and CEO of Portugal The Place. She has expertise in international real estate and community building and helping US connected citizens relocate and settle in Portugal. Joining Paul and Colleen, we have Sasha Young. Sasha is the founder of Area Global Legal Advisors. They specialize in cross-border tax compliance, wealth preservation, and estate and tax structuring for US citizens here in Portugal. And lastly, we have Owen Leonard. Owen is a US qualified investment advisor at Beacon Global Wealth Management and focusing on cross-border wealth management for US connected citizens currently living in Portugal. So let's begin today's discussion with a question on some of the estate and tax planning essentials. Sasha, I'm going to start with you. Could you start by explaining what fundamental steps of estate and tax planning are for US citizens here in Portugal?
Yeah, sure. Thanks for the fantastic introduction. Excited to be here with all of you guys. So we're going to spend a lot of time today talking about tax, and we've got a lot of really great expertise about tax. So I'll talk more right now about estate planning and when you need to start thinking about estate planning. They're both, of course, huge parts of the relocation process, but you're going to start thinking about them at different times. So tax planning questions, I generally recommend people to start thinking about those things about 2 years before they make the big move, so that they leave time for big structural changes like changing their primary residence to a friendlier tax jurisdiction or restructuring business income. Estate planning is a little bit different. So it's the process of planning for what's going to happen to you and all of your assets. So that can involve drafting a will, retitling assets into trust, oh, we've already gone to the next slide. Great. So I recommend that people start to think about estate planning once they're here and decided that they're going to stay in Portugal for the long term. You already have, of course, an estate plan. The government designed it. It's the intestacy plan. And it basically says that the courts of the jurisdiction where you are a resident, so once you're living in Portugal, that means here, that those courts are able to appoint conservators to manage your assets if you're incapacitated, and they will oversee the transfer of all of your assets to your heirs at law when you pass away, after taxes and fees have been paid. So, of course, this makes for a nice little mess when you're resident in a jurisdiction where you're not from, where your assets are not located, where perhaps your beneficiaries are not located. And that's why we have sort of special considerations in the cross-border context for global families. Here at Araya Global, we focus specifically on this, this group of families, Americans in Portugal. And so we work with local council to design estate plans that are that work and achieve your goals in both Portugal and in the States. Our plans they're pretty comprehensive, and they cover everything from guardianship planning, which I think we're gonna talk about a little bit on the next slide, so we can move to the different parts of the plan. Yep, there we are. So yeah, our estate plans cover guardianship planning, which is super important for families with young children who may not have relatives in Portugal. It's very important that these families seek out cross-border advisors specifically. Of course, every parent's worst nightmare, aside from everybody in the house getting the flu, is that something might happen to both parents and then kids end up in state care or something like that while, Aunt Gwen in California tries to make her way over to Portuguese courthouse. We also think through incapacity planning so that clients can specify their wishes about everything from whether they want to be resuscitated, who can make their medical decisions, making sure someone gets the mortgage paid. And then we have the unique considerations as expats of thinking through the logistics of getting our remains to our final resting place. This is a very morbid conversation. I can appreciate that. But we make sure that clients have relevant insurance coverage to cover things like transport costs, which can easily run up to about 15,000 US dollars. And then, of course, the biggest part of the estate plan is charting out exactly how assets will be distributed and to whom, so that clients can avoid, for example, a Portuguese spouse getting a bunch of US assets and then having a huge cross-border estate tax bill on their hands. Like I mentioned, in terms of timeline, I recommend that folks start thinking about estate planning once they know that they plan to stay in Portugal. It's a priority, and it's something that people need to make sure that they get done at some point. But because our considerations cross-border are so different from a domestic plan, it makes sense to wait a little bit and make sure that this is where you're going to stay before tailoring your plan to account for Portuguese taxes and statutory obligations.
Thank you, Sasha. Owen, I want to come to you next. In terms of managing your investments as a US connected citizen in Portugal, what do they need to know, obviously, once they come to Portugal? And again, Sasha, if you want to come in behind Owen after he's given us his take on that one.
Yeah, hi everybody. Thanks for coming. And so one of the first things to consider is that US citizens are in the unique position of, even when they leave the US, they still have to consider their US tax obligation. So when they arrive in Portugal, they're now going to have a US tax obligation and a Portuguese tax obligation. Therefore, when you're thinking about your investments, you now have to think about how those investments are going to interact with both tax systems. So that means that things that would normally have worked for you in one location may not work as well anymore in the other location. And if you're aware of that, particularly before you leave, there may be things that you can do to adjust that. You may be able to find a different investment solution, or just be able to prepare, think about what those investments look like, what withdrawals from those investments look like, that sort of thing. One example might be a Roth retirement account. Works great in the US, no tax obligation on distributions. Those types of accounts will end up being taxable in Portugal. So just thinking about where those benefits may be gained or lost, that sort of thing can be helpful. So really having that mindset of having to balance and straddle between two different tax systems from an investment perspective is definitely one of the most important things to consider. And that's before we sort of dig down a little bit into some of the underlying investments, which we'll do in a little bit more detail, I think, with one or two of the other questions.
Okay, thanks. Sasha, anything you want to come in sort of behind Owen on those points?
No, I think the only thing that I would add is that as Americans, we're used to being taxed based on citizenship, as Owen mentioned. And so it often escapes us that becoming resident somewhere else means we'll also be taxed somewhere else. And so there is always that dual tax exposure as Americans non-resident in the States. And those two, tax burdens kind of sit side by side. We have a tax treaty between the U.S. and Portugal that helps make those kind of overlap a little bit with the use of foreign tax credits, exemptions, exclusions, deductions, but you don't get to opt in to one and not the other, which is, I think, what people expect when they hear that there is this treaty protection against double taxation. It's really kind of tax, line by line based on what taxes you're paying, what kinds of assets you have. And it involves, sort of piecemealing it together. There's definitely not a blanket, I'm just going to pay the U.S. side of it. Thanks very much. That's not how it works. So it's always helpful to mention because it's so different from how we're used to being taxed in the States.
And Tasha, what other things do sort of the US connected individuals need to consider when investing in Portugal, especially regarding the tax implications?
Yeah, there are lots of considerations. I would say the entire tax code in the US is sort of structured as a net over the continent to make sure that dollars stay in the US. And so it's really easy to run afoul of those rules. And if you're not working with professionals who are specifically attuned to the unique US tax considerations, and they just work with international, people, international families generally, you very quickly run afoul of PFIC rules, CFC rules, foreign reporting requirements. There are a million acronyms that I could throw out there. But I think the important thing is just to say that we might be used to DIYing a lot of our investment decisions and managing our portfolios when we're stateside. But that's really, really difficult to do well when you go overseas. And in fact, there are regulatory restrictions. Usually you'll have to get new advisors once you don't have a US address anymore. And it really serves our interests as individuals because it's so easy to run into real tax problems by trying to do it yourself. So my advice is to work with experts and spend that on the front end and not the back end because it can get really tricky really fast.
Absolutely. So do your planning early is what we're saying. And with regards planning, for those that are listening today, if you want to reach out directly to Portugal Pathways, we can put you in touch with Sasha and Owen, and they can obviously delve a little bit deeper into your specific circumstances and advise you on that subject matter. So we're gonna sort of move on a little bit, and we're gonna introduce Paul and Colleen into the conversation. Now, Paul and Colleen, you both got extensive experience working with US connected citizens coming to Portugal. And obviously you must have a really good insight into what's important to them. So I'm going to ask you to share what trends you're currently seeing amongst US citizens relocating to Portugal. What are their main questions, and ultimately what are they looking for? Obviously, especially when it comes to the subject we're talking around at the moment, so investments and tax. Paul, I'm going to start with you, and then Colleen, I'm going to come to you to come in behind Paul.
Yeah, thanks, Steve. Colleen and I have spoken about this many, many times because everybody comes at you and says, I've got this, could you just give me the answer? And as Sasha has said earlier, and Owen, it depends and it's complex. And there are ways that you can navigate these things, but it's very much, every person is different, every family structure and their investments are different, and they just want to know, am I going to be protected, or am I going to get hit with some tax that, they want certainty and they want it now. And unfortunately, that takes a bit of discussion and navigation. And the other thing that we find or see is that with US people coming in, is they want to match up, the standard taxes that I have in America. But you've also got to take many other factors in, like cost of living, the fact that property taxes are a lot less than the US. So then you've got to take the overall package. But I can't emphasize more, the earlier you start those discussions with people like Sasha and Owen, the quicker you get to peace of mind and some form of clarity in terms of, direction of travel. And one final point on that really is, US advisors have got to be regulated to advise you once you get to Europe and you have a European address or a Portuguese address. And sometimes people hold on to the old advisor, but they've lost the actual cover of the fact that they're regulated to give that advice. So it is important, and people like Sasha can definitely do that front end rather than find out and you're pulling the string up for 2 years afterwards trying to put it straight,
Absolutely. Kalina, anything you want to sort of add on that one?
Well, I think with the amount of people that I talk to, there's a little bit of sticker shock on the cost for the consultation or to find out how to navigate this. We're used to, again, I think someone said earlier, the DIYing your tax in the state. There's a lot of tools in the States where you can kind of do it yourself. And when we've made those referrals, a lot of times people are like, oh, I don't want to spend that much on it right now or whatever. But I really encourage people to look at it as an investment to protect your money in the future, because what you're spending on a professional today is going to create a much stronger plan and protect your income and your investments in the long run. So yes, it does feel like a little more than perhaps you were expecting to spend, because this is a complex matter and you need to have professionals that understand it and can guide you and really help you protect your assets. And the other piece of it is, from our position, being not licensed financial advisors, when we get asked all the time to just give them the quick answer or the simple answer, it's not just that I really can't answer it. I can't answer it. I'm not licensed. I can't give that advice. And so it's not that I want to skirt the subject. It's literally not something that I should be doing or would be beneficial to you to have me give kind of my 2 cents on what I think. So having a professional involved that's licensed and has the experience will pay off so much in the long run. So even if it feels more money than you were expecting to pay right up front, it will save you a lot more down the road.
And there's lots of advice. There's lots of advice here, Gillian, as well. You've got the complexities of the US Treasury, then you've got Portugal, and you've got to combine the knowledge of those two, and that's where the value is. So it's not the same. It's not apples with apples.
Absolutely.
This is cross-border analysis, which takes a lot of expertise and strategy to make sure that you come out at the end of it with the right answer.
And it's the same investment that you take, for example, when people retain us to assist them navigating the real estate market and the investment in real estate. And they come to us as a professional that have helped hundreds of people navigate it and go through all the different pros and cons. And they're looking very carefully to protect their money, right? It's the exact same idea. This is another form of the investment, and you should be just taking as much care and concern about that as you are about the tangible, I guess, hard thing that you're going to live in. I mean, that is an investment, but this investment that you have in assets, that's also equally important. So it's money well worth spent.
Absolutely. And Colleen, obviously, you were saying obviously earlier that whilst you're not regulated to give advice, something that you can share with the audience today is your experience, and the importance of planning ahead and having the right mindset, relocate to Portugal, as you've obviously trodden that path. So is there anything that you can share from your experiences?
Well, Sasha was talking about the estate planning, and I really wish I would have had her services when I moved here. And I will just share a personal anecdote. I moved with my 81-year-old father, and he passed away when he was 84. And he had about 6 weeks of urgent health care in the hospital. And he had an advance directive from the States. I had all his paperwork, get to the hospital in a high stress situation, as you can imagine. And turns out it's not accepted in Portugal. It was older than 5 years. It didn't have the proper certification. And unfortunately, I couldn't honor my father's wishes when he wasn't able to speak for himself. And it was incredibly stressful. So even though you think you might have everything in order from the States, it is really important to follow the advice and get those elements in place as soon as possible, because we never know. We don't know when anything is going to happen. And now looking back at it, it should have been one of the first things I did, moving with an 80-something-year-old father and all of that. But I was so caught up in the moment of getting our house and figuring it all out that it became kind of something I would do eventually. And unfortunately, the eventually caught me before I got it done. So the estate planning portion of it, I can't stress enough how necessary it is. We even included Portugal the Place in our support services emergency contact information, because as Sasha was saying, if you pass away and you have to coordinate everything, if you don't have relatives, if you don't have family, if you don't have someone, we're literally in many cases the only people that people know. And so they use our number. We're the ones that get the call in the middle of the night and then have to navigate helping people deal with the unthinkable. So it's a reality. We all need to be aware of it and not shy away from it, but get those things in place early on and have that part of it rest easy, at least as you're navigating all the other changes.
Brilliant. Thank you, Colleen. Thank you. Owen, I'm going to come back to you, and I want to sort of pose a question to you. So let's say that I'm a US citizen and I've just really relocated to Portugal. I have my Portuguese address and I'm looking to potentially not to have my investments in the US. Can I still use my old US wealth manager, or do I need a Portuguese one that's regulated to manage US clients right now in Portugal? Now, I think we've already answered that, but again, I think we might need to stress that again.
Yeah, and I think this was something that Gina was asking about. So in terms of the location of the assets, they can remain in the US. It's more about what your advisor can or can't do with those assets, or what access you may have to those assets and those accounts. The main point is, it is very advisable and almost essential that you have an advisor who is familiar with both jurisdictions. If you just have a US advisor, they'll advise you based on the US system, and that could get you in trouble in terms of Portugal. If you decide to move everything over to Portugal and just have someone who's Portuguese focused, then you can get yourself into trouble in the US system. So it is essential to have someone who can help manage both sides, who's aware of both sides. In terms of, when you move to Portugal and you have a non-US address, even if you just have general investment accounts, they may not be with an advisor, you may just be on one of the big platforms. When you tell those platforms about your new address, a lot of them will restrict your access, whether that means you can't contribute anymore, you can't change your investments. Those sorts of things end up happening and can cause you issues in terms of if you want to change any of your investments, that sort of thing. So finding solutions to that, and there are solutions to that. There are advisors who are regulated in both places, who can you can move the money to Portugal or to Europe if necessary, or you can keep it in the US under the same accounts. You just need to find advisors who are able to look after that for you and sort of open up some of those investment options. And another point on that is, if you are looking to, say you want, your investments in euros because you're now in Europe, that is one thing you can do if you do want to bring over some of those assets and invest through a platform that's, based in Europe or allows for a US citizen living in Europe. As Sasha said, if you sort of try and DIY it, you can get yourself into a lot of trouble. You can invest in things that are available on those platforms that you may or may not know how they're considered in the US, or Sasha also mentioned something that's called a PFIC, passive foreign investment company. If you're not aware that you're invested in those, or you don't get out in front of investing in those, they can come with very punitive tax rates in the US. So one thing, if you try and DIY a solution when you come over to Portugal, you may think, oh, I'll invest in a European-based ETF the same way I would invest in a US-based ETF. And suddenly a European-based one is considered a PFIC, and you've just given yourself a real headache from a US tax perspective. So the sort of key points there are, it's working with the right people to help you understand what is the best solution for you. Is it keep it in the US but with an advisor who knows both places? Is it move it to Europe but with someone who can help me avoid those PFIC trap holes? There are solutions, but there are definitely a lot of things that you need to be aware of when you're making specific investments.
Lovely, thank you. Sasha, is there anything you want to sort of add to what Owen was just saying then?
I think I would just add that agree to all of it. I think the question maybe was, can I keep my US advisors? And I would just add to that question, there's can you and there's should you. Can you talk to the advisor and see? I mean, you have to let them know, look, I'm moving, I might not have a US address anymore. Will that cause any restrictions to my ability to transact as we have been? But then there's the question of, should you keep your US advisors? And I think as we've all mentioned, it can be pretty tricky if the advisors are not aware of the US side cross-border considerations like PFICs and how easy it can be to run afoul of those. If you don't have someone who knows the Portuguese implications, then you're impacting your Portuguese side tax considerations too. So I think the answer sort of overall is talk to some experts, involve them early, talk to your advisors that you already have, let them know your plans with time, so that if you need to find a new custodian, if you need to move over to new advisors, that you have an opportunity to do that without sort of time pressure, because people do arrive here and then realize that their custodians say we can no longer manage your accounts and you need to find a new custodian, and they have no time to find somebody else to pick those up. So there's some lead time there.
Thank you both for that. I would obviously just take this point just to remind the audience that if they need any specific advice or would like to arrange a discovery call, our contact details are in the chat, and there's also a little pop-up in the left-hand corner of your screen. As it's always important, as we keep saying throughout this, to get specific qualified advice for your own situation. Another question here that I'm going to throw back to Sasha and Owen is that what challenges do a US citizen face when managing investment accounts between US and Portugal, and how can they address them? I don't know, Sasha, do you want to pick that one up initially?
Sure, yeah. We'll start with PFICs. I think PFICs are the big one that we run into all the time in the cross-border space. PFICs, as Owen mentioned, are passive foreign investment companies. These are US side considerations. And so the reason people find themselves in this problem is because their Portuguese advisors have no reason to know that these products might be difficult from the US side. And if their US advisors don't have cross-border expertise, then they may not know that they're PFICs either. And so you make these investments. And for example, the golden visa investments, many of them are PFICs, all of them are PFICs. And there's no out. There's a way to, kind of temper that a little bit with a QEF election, but it must be made in the first year that you own the PFIC. And it's not something that you can really ask for after the investment. It's sort of a gatekeeping idea. I mean, you want to talk about the fund's ability to provide QEF disclosures before you make the investment, because for the fund, it's pretty administratively burdensome and expensive for them to keep track of all of the things that they need to keep track of in order to provide these disclosures. So I think PFICs is a big one. CFCs, controlled foreign companies, so Americans owning companies overseas, will have some unique tax considerations. And so the local advisors should be tracking how many Americans are owners to make sure that they're not running afoul of those CFC rules. Those are the ones that come top of mind that we see every single day. And I'll say that as a tax advisor and a tax professional, before I was in the cross-border space, not something that, was in my sort of day-to-day lingo or something that I was looking at. And so it's definitely something that's unique to the cross-border space, and you want to make sure that your US side advisors are aware of these.
Sasha, could I just come in behind that, specifically on the golden visa side of things? Because obviously we've had a number, because we've got a wall of US citizens that don't want to see all their assets. They're coming to Portugal. They don't want all their assets invested if they're leaving America for Europe. And sometimes it sort of feels quite alien, the fact that they've got all of their assets in America, yet they're living in Europe. So we've had that conversation about, the QEF qualification. And as you know, we've created an index of all the golden visa funds in Portugal, or at least 30 of the main 40. And there are some that have that. And we can help people if they navigate that early, like you say. And I believe, isn't there is some opportunity to make direct investments in private equity, that it doesn't fall foul quite in the same way. Is that right?
Yeah. A PFIC is a company that earns passive income, right? So there are thresholds that have to be met for a company to become subject to those PFIC tax regulations. So there are ways to navigate it through direct investment in active income, in non-passive generating companies, passive income generating companies. So there are ways to work around it, but like you said, it involves, being in front of it and not after the fact. You can't really restructure a PFIC to not be a PFIC if you are sort of past the QEF timeframe, or QEF election is not available for that particular investment, and you're locked in because you've got a lock-in period. Then there's no opt out, there's no selling. You just have to deal with the tax consequence of the investment. And so there's some flexibility, but all flexibility involves getting in front of the problem. From a PFIC perspective, from a CFC perspective, from a compliance and reporting perspective, all of these investments have reporting requirements, forms that need to be filed with the IRS. Foreign assets need to be reported on FATCA forms and FBAR forms, and there's just a slew of acronyms that we can throw out there. But the point is that there are ways to work around it if you get in front of the problem. And to get in front of the problem, you have to identify the problem.
Brilliant. Thank you, Zaya. Sasha, I'm going to stay with you just as quickly and just ask, what are the tax implications of withdrawing from a US retirement account while living in Portugal, or investing in private equity or golden visa residency by investment alternative investment funds?
Yeah, I hate to give the lawyer answer there. It depends. but,
Yeah.
but it depends. It depends on the kind of retirement account. It depends on whether you have NHR or you don't have NHR. It depends on a bunch of different things. I think if I can, sort of draw broad strokes, it would be that your USI tax considerations are worldwide, and when you're a Portuguese tax resident, that's also worldwide. So if you're living here and you have income, you're, generally speaking, subject to tax in both jurisdictions for that same income. And to the extent that you can offset that double taxation with a credit or an exemption, that's something you have to, affirmatively claim under the tax treaty. And so, it depends how you make withdrawals from your retirement accounts. Depends how you draw down your investments, how those will be taxed. But at the end of the day, you're going to have to reconcile your Portuguese tax burden and your U.S. tax burden and see how you can, exploit the tax treaty benefits in order to bring that number down.
All right, thank you, Asha. Paul, I'm going to come to you. As someone that has supported private wealth coming to Portugal, what have you been seeing in the type of investments that are most commonplace, such as a golden visa resident by investment program?
I mean, other than the obvious, obviously, a lot of people invest in property when they come to Portugal. So that's obviously, one of the primary ones. But as you're aware, Steve, we've just recently launched this Portugal Investment Owners Club to support individuals that are coming to Portugal to enjoy money can't buy experiences, almost like a membership group where people can share different ideas and thoughts. And, we're seeing everything from people investing in renewables to tourism and hospitality. Media and international events is very strong at the moment. Portugal is third in the world at holding international conferences, has a growing tech scene. Healthcare also is another area we're seeing, a lot of interest. And these are all sectors where Portugal is performing above the market internationally. And if anyone, looks at the market, little Portugal is now outperforming the Eurozone on GDP growth. It's just had a A+ rating from one of the international ratings agency, and its inflation is declining faster than the UK and Europe. So it's in a good spot. And Ernst & Young did a report a few months ago saying that investor confidence in Portugal is at an all-time high. So it is a good time, but you have got to get that structure and planning right, which is so important.
Absolutely. Owen, do you have anything to add to what Paul has just said? And what is the best practice when setting investments that comply with both US and Portuguese laws?
I agree with Paul, and I think one of the best practices is always prepare as much as possible before you make a decision or change an investment. Prepare in terms of how that investment will interact with any tax obligations that you may have. Prepare in terms of how that investment, if you look to depart that investment at any point, what that sort of looks like. And one of the best ways to do that is to speak to experts, speak to those on the front end who can help from a tax perspective, and have those who can almost hold your hand throughout the process and just make sure you don't make any missteps. Just have a resource that you can always go back to in case you have any doubts, any questions, that sort of thing. And I think as I said, there's without that sort of access to that sort of help, you can fall into some pitfall or some trap holes pretty easily, and you may come up against things that you don't necessarily expect. I'll give an example. There's this kind of, you can get into this catch-22 as a US citizen living in Portugal or living abroad, trying to find investments. As Sash and I both mentioned PFICs, and as I mentioned, a US or an European-based ETF is a PFIC and is not generally a good option for a US citizen to invest in. However, once you're in Europe and you have an investment account, you think, okay, I can't invest in European-based ETFs. Let me invest in US-based ETFs or US-based mutual funds. However, that's usually not an option either, because US funds don't comply with European regulation. So there's just a few different things that can catch you out. The sort of right advisors, right managers can give you access to a wider range of investments. So one of the best practices is to know exactly what you want the investment to do for you, and then figure out how you can get access to that, how you can prepare for it, and sort of speak to the experts who can help you do that.
Brilliant. Thanks, Aaron. Colleen, sorry, haven't come back to you for a little while, but I will ask you, what are some of the most common mistakes that US expats make when relocating to Portugal, and obviously how can they avoid them?
Well, stereotypically, Americans have a tendency to be very independent and want to find answers for themselves. And I think it is easy to have confirmation bias on either negative or positive by going into the social media rabbit hole of asking advice online and trying to find the answer that fits what you're hoping for. So you can ask it 10 different ways online and get 10 different answers, and one of them will confirm or deny whatever it is you're wanting. I see it all the time. It could be as simple as Portugal doesn't like dogs, and then they decide they can't move dogs here. Or it could be really complex, like people will put all their financial information in a post online and then ask the internet to give them their tax advice back. I can't think of anything more unnerving to put your financial information in a post online and then ask total strangers to give you advice on it. And I see this all the time. So I think that's one of the things we should be very cautious of. The social media platforms are great. The communities are great. There's great folks in there, but there's also some bad actors, and there's people that aren't up to the latest information. And so finding professionals, going to people that this is their livelihood, this is what they do for a living, are going to guide you in the right direction. So that's one thing I see quite often. Also, another thing that I think that people don't take enough credit on as far as, this is a big move. If it's a positive reason you're moving, if you're moving for a reason because you want to make a change, whatever the case is, even though you're thinking this is great, change is hard. And so wherever you can find someone to support you, especially in areas you're not an expert in, this is the time to invest in that. And I'm not even speaking to just the tax and estate planning. I'm talking about everything from insurance to, if you're not comfortable doing the visa processes, if you feel like this isn't an area that you're confident in, find a professional to support you. This isn't a time to be giving yourself that extra stress, because everyone has a different way of doing it. There is no right way, as far as, you could get advice saying do it all yourself or not. But if you feel uncertain, then you probably are, and you should get someone to help you.
I'd like to come in behind that and just reiterate reinforce what Colleen's saying. As you can tell, I don't have a Portuguese accent or a US accent. But, I talk to a lot of international people, and the law of unintended consequences comes to mind. In the early days of getting involved in this, the amount of conversations we have where we give lots of guidance and advice and steer people, but sometimes you can tell 60-70% of people are trying to just get information so they can go and do it themselves, which is fine. And we're all good with all of that. But the reality of it is give you an example. A lot of people, when they were applying for NHR, they thought they could do it themselves, which they can. There's an online process. But if you don't know the nuances of the local tax offices, and if you go to that office in Lisbon, you'll get a different answer to the other office. And if you're not on the ground in Lisbon, you've got no way of navigating that from a foreign country. And the other point that Colleen made about what you read on social media, there are so many half-truths out there and misinformation in terms of, well, no, it's like this, or it's like that, or tax. I get NHR and an American citizen, and I'm somehow it's going to transform my tax to next to nothing. Well, none of those things are true. And the truth of the matter is, you do need to go on a path, whether it's people like Colleen, Sasha, Owen, or other partners that understand and are used to navigating it with hundreds, if not thousands of people going through the same process. And the earlier you do it, and let's be honest, tax isn't as much fun as looking at a location. So you're going to put that one off. Estate planning doesn't sound exciting, does it? But it's no, in the sense, do I want to look at that beautiful new property and where I'm going to live and, the life I'm going to live? They're all the things that get you up in the morning. But reality is the pain points are where you do need to look at, and you can't kick them down the road, because otherwise you'll be pulling up the string for the next 2 or 3 years with regret,
Absolutely, Paul. Absolutely. I'm going to change tack slightly, and I would like to ask a panel, without getting too political, how do you feel with regards to how Portugal will fare with the US administration and its policies, and what do you think that will happen over the next sort of year or two? Colleen and Sasha, I'm going to ask your thoughts initially, and then I'd like obviously to hear from Paul and Owen. So, Sasha, what your thoughts are on that?
This is a big question.
Big question. I know, big question.
It's something that I get asked all the time, and I think the important thing is that people are thinking, how do I plan for this? If there were clarity about how to plan for it, we would tell you how to plan for it. The difficulty is that there's not, it's really an unpredictable situation, unprecedented in many ways. And so how do you plan for what's unpredictable? My advice is just diversify, and it's diversify your portfolio, it's diversify the currencies, diversify whether you've got things like, tied up in accounts and in cash. Is the U.S. banking industry going to be regulated the same way, with reductions in federal workforces at the FDIC and at the IRS, and all of these different considerations? I think there's not a clear path. I think we've all been really inundated with a lot of Americans coming over, a lot of Americans looking for ways to get themselves and their assets maybe out of the States or from being concentrated in the States. I think that's really smart. And that's, I guess, the only advice that I can give people is to try to be diversified, and know that when you have assets outside of the U.S., you may have some reporting requirements associated with them. You've got to file FBARs on foreign accounts with more than $10,000 at any point in the year in the aggregate. So you may have an FBAR to file, very easy, not complicated to do, but you do have to do it. You may have some FATCA compliance reporting associated with brokerage accounts overseas and foreign pensions and things like that. But that I think is a wise thing to start thinking about, just diversifying internationally.
Colleen, what were your thoughts on that question?
I catch people in a lot of different stages of wanting to move to Portugal. Some folks have never been here. They're in the very earliest parts of the process. And you know, the what we're seeing is a dramatic increase in people that are looking for, you know, a way to manage how they're feeling, how they're being impacted, and looking for a way to change their family's experience. And I don't believe that Portugal at any time in the near future is going to make any significant changes to the processes of how to accommodate or have people come into the country. But it's important to note that with all this increased interest in relocating abroad, and Portugal's getting a big amount of that, a big slice of the pie, everything is backed up. Everything is slow. All the services, all the different, you know, consulates and all of the things you're going to need to get access to, you need patience and understand that there's been a surge in interest. And so what I'm really trying to have people, you know, when we're talking about what the administration is affecting in Portugal, there's a lot of political conversations we could have, but when it comes to the bureaucracy, when it comes to the processes, where I'm seeing the effect is just the surge of people that are trying to navigate the immigration process that was already tricky before this happened, that was already kind of slowed down. And so just be prepared for that. And that goes for also the real estate market. We've seen a marked increase in traction and movement and sales since November. It's been noticeable, and we are not anticipating that to slow down. So if you're interested in purchasing real estate and you think you're going to wait a year or so, if you have a finite budget or a certain amount you want to spend, you really want to take a look at that in this whole financial planning, you know, process, because what we see today, I doubt is the price points that we're going to be seeing in a year from now.
Yeah, good point. Absolutely good point there. So Paul and Owen, I think just before we move on to the sort of final topic of the webinar and then onto the Q&As, have you got anything to add behind Sasha and Colleen? Paul?
Yeah, I mean, you know, trying to work out, I mean, all the nations of Europe and all the leaders of Europe are trying to work out what's going to happen the next day. So I think what Sasha said earlier about diversification, you know, we was at an event before Christmas with a load of US connected citizens that actually already moved to Portugal, and they were moving loads of their assets through fear. But you shouldn't do it through fear. You should do it through planning and just think through and be logical. And if you're logical about it, spreading your risk, you know, is always going to be a good, and diversification is always going to be a better option than having all your eggs in one basket. And reiterating what Colleen said, you know, it's a rising market, Portugal. So in terms of property, I do not see that going backwards in terms of demand. You know, so there are other markets where the property market is maybe flat or slightly declining. That isn't happening in Portugal. So you have to consider that. You also have to consider things like if you're going the golden visa route, there may be pressure because of the amount of people going that route to push the investment level for that at some point. But again, you need to do what's right for your family and your future, and make sure you've got the right people around you to do it.
Absolutely. Again, I'm looking at the Q&A, and we've got a Q&A coming up at the just after this last question. And again, if we don't manage to get through all the questions, which quite clearly we won't, because it's a very engaged chat, and thank you for that. Obviously, we don't get to your questions. I said our team will reach out to you sort of personally and get you those answers that you're looking for. Sasha, again, just before we move on to those sort of Q&As, I know that you wanted to share a slide that might help our audience better understand sort of estate planning and considerations around it. So again, just before we pop into that Q&A, I'm just going to get this slide up for you, which is this one, I believe. It was this one I think you wanted to talk to just before we get into those Q&A questions.
Yeah. I was planning to go through a case study and talk a little bit more in detail about how our cross-border estate plans work, but I knew we weren't going to have time for that. So I just wanted to mention just a few things about the nuts and bolts of our cross-border estate plans. And so existing right now, the intestacy statutes would mean that you have multiple probates You're subject to primary probate, as it's called, where you're a resident. So it would be here in Portugal. And then if you have real estate in other places, you may be subject to probate there as well. Of course, these means more and more lawyers' fees. In Florida, just the cost of probate and attorney's fees is 3 to 7% of the entire estate value. And so that gets into the tens of thousands very quickly. And probate takes 12 to 18 months, and all of your accounts and assets are tied up during that process. And so what we do with our estate plans is try to avoid probate because it's so much bigger of a problem, particularly when you're cross-border. And we do that with trusts. Now, trusts are private agreements between the trustee, who's the legal owner of the assets, and the beneficiaries who are going to receive the assets. And so someone was asking a question in the chat about if the plans are valid in both jurisdictions. And to the extent we're talking about powers of attorney or medical directives or things like that, those documents are admissible. They work in both jurisdictions. They're designed to work in both jurisdictions. But a trust is designed to avoid the jurisdictions. We're trying to get you out of probate in general. And so it's a way to take the entire probate process, take your assets out of the probate process, give them to a trustee, and have the trustee make the transfers to the beneficiaries outside of the confines of courts and jurisdictions. So I tried to answer that in the chat, but I was getting very lawyerly about it. And it depends. But the whole point of the estate planning is for it not to be admissible in both jurisdictions, right? We don't want this to go through probate in multiple jurisdictions and have those fees and have all of that kind of locked in court until it gets settled.
Brilliant. Thank you for sort of clearing that up. Now we're going to move on to the Q&A. I'm fully aware that we're sort of reached the hour end. And again, just want to reiterate that if you're unable to sort of stay through, and the reality is that probably going to go over by sort of 10 or 15 minutes, that this will be recorded and it will be sent out to all of you within the sort of next 24 hours or so.
Can I hold this real quick? Can I just throw a question at Sasha real quick?
Yeah, for sure.
One of the things that I find from our clients constantly are people are saying they're going to maintain an American address and then keep all of their US investments and not really deal with any of this. That's the common response that I get when they're like, well, this is just too much. I'm going to use my daughter's address or whatever. And I'm just saying this, the blunt thing out loud, because what are the consequences on that? I think that's a question I'd really like to hear answered. Like, what does that do to people that live in that kind of gray area?
I kind of want to just put my hands over my ears and say, la, 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 la. I mean, the short answer is that when you're filling out a form, and putting your residential address, you are saying, and you sign it at the bottom and you say, this is all truthful, etc. That's what you're saying that your residential address is, and that's where you live, and that's how the bank or the advisor or the custodian determines if they have to make any reporting obligations, if they have to withhold portions of distributions, and how they can comply with the laws that apply to them by being your custodian. And so it's true, people do it all of the time, and there's sort of large scale non-compliance, I think. I will say that the consequence maybe is like in an audit, it would come out, and then you would have a sort of back story that you would have to explain, and that can show bad faith, and that can have additional consequences to it. But I will add to that when you have a really robust auditing structure, IRS agents that are really aggressive and making sure that people are compliant with the letter of the law, then you can kind of manage risk that way. But that's expensive for governments. And so sometimes we see in the expat space countries where they don't have a ton of resources to dump in large scale audits, to make an example of someone and say, we can pick one person, audit them, be very public about it, and that's going to serve as a warning flag to other people to not be non-compliant. I think Portugal is ripe for that. And so I know I'm a lawyer and it's my job to say, like, do the right thing, but I don't want any of my clients to be the person who's made an example of. And so, I'm always going to sort of veer on the risk averse kind of conservative side when it comes to that, because I think there's just a real risk. Everybody knows that there's a lot of non-compliance out there, so don't do it.
No, I'm glad
your correct address out there.
I have said it, but it's nice to hear it from the professionals that can explain the consequences, because fundamentally it's fraud, right?
Absolutely.
I would also add it's not actually necessary. There are solutions for US citizens when they move abroad. There are custodians, there are investment managers who will work with you as a US citizen with a non-US address. So on top of everything Sasha said, it's not actually necessary to do. There are options for you, especially if that is something you are concerned about.
Yeah, I totally agree. Why put yourself in that risky position when there are ways to do it? I've had conversations, but I do actually know someone who got themselves in a lot of bother about it, and they've been doing it for so long. It was very difficult to unpick the realities of where they were, and why. Why would you put yourself in that position when you don't have to? I mean, there's quite a few questions I see in the chat. Can I keep my US advisor? Can I? It's like a blanket, if you like. Some US advisors can't wait to let go because they don't want it coming back on them, because they're not really. There's one of the messages in the chat. Can my US advisor come on a consultation call? Anyone can. We're all trying to help everybody. Anyone can come on the call. But you have to bear in mind, are they regulated, or does their advice count for anything once you get to Portugal? That's the bottom line. Yeah. Absolutely.
We are going to dive into these questions. As Paul said, there are lots of questions and lots of comments in the chat. So I'm just going to pick a few out. Sebastian, who unsurprisingly is from the US, and he's asking, how can you take advantage of NHR tax status as an American? Maybe, Owen, you could take this question on?
So there are a couple of things that you can still take advantage of in terms of NHR, mostly from the Portuguese side of things. For example, if you're of the right age, making withdrawals from your US retirement accounts will still likely be taxed at the 10% pension rate in Portugal. There are a couple of caveats there in terms of making sure the US retirement accounts are considered pension in Portugal, but that's more of a specific individual thing. So happy to take that offline with someone if needs be. There is one thing that is a little unique for US citizens when it comes to capital gains in terms of NHR. So for the most part, when you realize foreign capital gains as a NHR holder, those capital gains are still taxable in Portugal. However, because of US citizenship taxation, if a US citizen realizes a US based capital gain as an NHR holder, they still owe taxes to the US on that income or on those capital gains. Therefore, there is a possibility to have those gains be exempt from taxation in Portugal. That's not a standard rule. So there may have to be arguments behind it. But that's one unique thing for US citizens. But in terms of taking advantage of capital gain of NHR in general, the same things apply to anyone else. The pension income, dividends as well, dividends and interests. Of course, any of your US based dividends or interest will be tax exempt in Portugal. Yeah, there are ways to, whether it's crystallizing capital gains, whether it's choosing specific types of income, there are definitely ways to take advantage of your NHR as a US citizen. But the flip side is any income that you take or any way that you try and take advantage of it, you just have to consider your US tax obligation at the same time.
Sasha, is there anything you can add to that? Because I'm keen to hear your take on it.
No, I think that's exactly right. It's I don't know if advertised is the word, but we think about NHR as a way to avoid, taxes, and it doesn't quite work out that way for Americans, of course, because of the US side tax consequences of everything. But with that said, a lot of times, when Americans move over, they kind of have to go through this process of not having only US source income. And so to the extent that you have a lot of US source income and not very much Portuguese income, and you have NHR, there's definitely an opportunity there to reduce that Portuguese tax exposure, which can be, for earned income up to 48%. So it's significant.
Thanks, Sasha.
Steve, is it worth me touching on NHR 2.0? Because I see there's a number about the new tax regime, which people are calling NHR 2.0, but it really stands for IFICI, which nobody can pronounce the acronym of what that relates to. So I won't go down that rabbit hole, but I just think it's worth mentioning because I've seen 2 or 3 chat questions in there about the new regime. And the big difference between the new regime and the old regime, which finished at the end of December to new entrants, is pensions. Pensions are going to be outside, so you will pay progressive rates on pensions if you draw them down as a Portuguese tax holder. But it does look like a good opportunity from a capital gains and passive income such as dividends. But again, it hasn't been fully tested because it's 3 weeks old, as opposed to the old NHR that came in 2009. And I'm sure Sasha and some of our Portuguese immigration partners will be able to jump on calls and advise anybody as that evolves in the coming weeks.
Absolutely. And again, maybe we can get our team to do is quickly share a link to the NHR 2.0, or as correctly known, the IFICI tax exemption. We've got a very detailed page on our website, so perhaps one of our team can quickly share that, and that gives an idea of the eligibility and the criteria that you need to align, obviously, in order to take advantage of that particular tax exemption. And again, as Paul alluded to, we can set up a no obligation discovery call with one of our immigration and tax partners who can explain that in a bit more detail. And again, specific circumstances will obviously relate to each individual's eligibility for that particular tax exemption. So again, we have lots of questions, so I just want to get through because we're sort of 10 minutes past the hour. We've got a question here, and Sasha, I'm going to come to you on this one. It's in from Michael, and it's: how does Portugal's forced heirship law impact US estate planning?
So it depends on the makeup of the family. Forced heirship, for those who don't know what that's referring to, it's a local succession regime that basically says a certain amount of your estate must go to your heirs at law. And so you don't have sort of the freedom that we do in common law countries in the US and the UK to just give to whomever you would like your assets and all of the assets in your estate. And something like 2/3, depends on how many kids you have, how much of that your estate is locked up in those forced heirship requirements. To the extent that we have, for example, 2 American spouses, all American beneficiaries, and U.S. assets, we can pretty easily put that into a U.S. trust, a U.S. trustee, and exempt it sort of in its entirety from the forced heirship regime. If there's a Portuguese spouse or Portuguese beneficiaries, then they have rights under that regime. And so, it kind of is a case-by-case analysis about the family dynamics. How likely are they to kind of pursue those rights in court if you're leaving them left in your estate plan than they would get under the rules of forced heirship. But it comes more into play when we have Portuguese beneficiaries or members of the family than when we have sort of fully expat families.
Thank you, Sasha. Poll question for you from Amanda. When choosing the right alternative investment fund for my golden visa, what options are there available? And can Paul tell me a little bit more about Portugal golden visa index and on all the funds?
Yeah, I mean, there's 30 odd funds in our golden visa investment fund index. We put it together because there was nothing out there that created a collective to index the different funds. There are a handful that are QEF qualified. As Sasha said, that needs to be embedded in their management agreement, like their PPM agreement, not a private placement memorandum, or they call it a management agreement that gets filed with the regulators in Portugal, which can hold them to account to make sure that they're delivering on what they promised to the investors. But I would suggest you arrange a call with us, because it's not a one-fits-all, and we need to understand your circumstances to even see if golden visa is the right route for you. Golden visa is really for people who want that flexibility to be able to come and go and not have the 183-day rule and have to pay tax after they, breach those stay dates. So you only have to be in country in Portugal 7 days in a year, and obviously it gives you a great deal of access to, a European citizenship after 5 years, and that can include your offspring that are still in education. They count as dependents, even if they're adults in education, or if they're even parents over 65 in Portugal deemed dependent, so they can be added to the application for that one investment of $500,000 in one of the alternate investment funds. But I think I don't want to go any longer because I can sense we're well over the hour. So
yeah. I mean, we obviously haven't managed to get to all the questions quite clearly, and there's some really interesting, in-depth questions in there. And as I said before, with as we started, that we've got a team of experts who can obviously respond to your questions, and they will do over the next sort of 48 hours or so. But before we sort of wrap up today's webinar, really just want to go around the room and ask each of our panelists really just to sort of give us their closing remarks, your key takeaways, if you like. So again, Paul, I'll start with you. What's your sort of key takeaway?
My key takeaway is plan early, because these subject matters are not necessarily the things that you would, the sexy part about relocation and investment, but they are the important parts of it that hold it all together for the long term. And the other thing is, you are coming to a foreign country. You cannot apply. Well, we've done it all ourselves in the US. It's not the same. This is a completely different location, a different country, governed in a different way. It's friendly, and it can be navigated, a little bit bureaucratic. So you do need to have the right people. And please reach out to us at Portugal Pathways. We're happy to introduce you to any of the experts in any of the elements of relocation or investment in Portugal.
Thank you, Paul. Owen, what's your key takeaway from today?
I think sometimes for US citizens, when they move abroad, when they start digging into some of the investment options or the tax obligations, things can feel a little bit depressing. It feels like you don't have much that you can do. So I want to say the key thing is you do have options, you do have solutions. There's ways to diversify your investments. There's ways to keep access while staying compliant. And one of the key ways to do that is to talk to the right people, talk to the experts who can give you the right information on both jurisdictions. But yeah, there's definitely hope. Don't have to worry about that.
Thank you, Owen. Sasha, I'm going to leave the last words to you.
Ooh, that's pressure. Final words. I think I would just second what everyone has said, and thank everybody for listening. I'll say that we so far until now, we're the only American advisors here in Portugal. And so we really work hard to service everyone at, all the full range of net worths. And so we have high net worth clients that have very complex matters, and we can, dig in on those and advise teams. And then we have retirees who have the pot that they've saved for their lives, and that's what we got to figure out how to spend, and not a ton of additional resources to spend on advisors. And so, we do our best to service those clients as well as possible. So I would say if you're concerned about, engaging attorneys, a lot of times people have never worked with a lawyer before, reach out. Let's start figuring out how we can find something that works. But it's, more important to get in front of it and work with advisors than to be sort of afraid with that sticker shock, which I appreciate is, for people who don't work oftentimes with attorneys, is kind of jarring. But we'll figure it all out. And this is a really fantastic organization to make sure that our kind of unique considerations as Americans are well taken care of.
Thank you, guys. That's I think judging from the feedback and the comments and the questions from the audience today, it's been a really engaging subject matter. Again, to reiterate, if you want to speak to Owen, to Paul, to Sasha, to Colleen. Unfortunately, we lost Colleen. Obviously, I'm presuming to bad connection 10 minutes or so ago. Please either reach out to us. Obviously, our link is in the chat, or reach out directly to me. And my email address is steve.philp@portugalpathways.io. It's been a pleasure having you all. And also a big thank you to our panelists, to Sasha, to Paul, to Colleen, and to Owen. We have got webinars next week. Paul mentioned we've got, a sexier webinar next week, maybe is the right word. We've got a webinar entitled Finding the Right Place to Settle in Portugal. So that's all about location and abodes and community. And again, Colleen will be on that one, along with a couple of other guest panelists. And that's on Tuesday, the 28th of February at 4 p.m. GMT, Lisbon, London time. And then we follow that.
Steve, it's not the 28th, I don't believe.
I've got the 28th. I do apologise if it's not the 28th. It's what I've got in front of me. So it's next Tuesday. And then we follow that in March with our next webinar in March. It's the impact of Portugal's Golden Visa residency by investment, and that's on Tuesday the 18th of March at 4 p.m. Lisbon time. So Paul is correct, the next week's webinar is the Tuesday the 25th. I do apologize, obviously we just got that date wrong on some notes here. So that's the 25th of February, and that's Finding the Right Place to Settle in Portugal. All this information and a bit more in terms of the synopsis of the webinars is available on our website, which is www.portugalpathways.io, and go to our events page and you'll be able to register for those events I just mentioned. Again, final big thank you to our audience and to our panelists. And the watch back link will be going out within the next 24 hours, and it'll be on our YouTube channel. Just leaves me to say goodbye. Thank you for joining us and have a great rest of your day. Thank you very much.